The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody. Happy belated Merry Christmas. I hope you have a great rest of the week. I know with Christmas falling on Friday, I know we gave our staff off Thursday, Friday, Saturday, Sunday. The next week, Thursday, Friday, Saturday, and Sunday, because we're getting ready for tax season. 5 days away, you guys. You got 5 days to make changes. And, you know, knowledge is power. So everybody's talking about the $600 stimulus package. But we thought it's important for you to know that what's really in the bill, should it be signed, if Congress should override the veto, because it's really a lot more complicated than what they're giving everybody credit for. And again, you have 5 days to make changes. I just was so good. I decided last night I was going to bed. I said, I'm going to empty out my file cabinet drawers, put them all in the 2020 box and file it away. And I just did that. So I'm so proud of myself. Anyway, I got in studio Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday. Merry Christmas to you. And
Merry
Christopher
Christmas.
Fabian.
Hello, Esther.
Hello, Christopher. Okay, so right now we think that the IRS is going to be open up around the 15th of January. We're really not sure because should they have to handle this stimulus stuff, which is up in the air because President Trump could sign it, they may back it up. But there's a lot of things in the law. I think no matter what, it looks like there's going to be another stimulus no matter what. So we're going to talk about what they put in it and what looks like they're going to favor again. So we'll keep you up to date. Our phone number here in studio is 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930.
And I just want to say
let's
for
go. And I know we got a
who's-
lot of people wondering about everything.
I want to say anybody
everybody
who's-
I think heard about this $600 per person, dependents up to the age of 17.
Yeah, I just wanted
Right?
to say for anybody who's driving out there, be very careful and diligent and enjoy the snow.
It is beautiful, though.
Oh, yeah. It's just the
It is
roads
beautiful.
are very treacherous.
Because it really hasn't been much snow, so it's beautiful.
Yeah.
Anyway, for people, single people, income under 75, married, joined up to 150 with a phase out, $5 for every 100 you go over that. If you did not receive a stimulus payment originally because you were not a U.S. citizen, they're actually authorizing payments of $1,800, $1,200 for the first time plus $600 for the second time. So that's in the bill, and that's a big thing. Unemployment.
Oh, you keep cutting in and out and in and out.
Yep. So, yeah, unemployment, for those that missed it, could be extended for another 11 weeks with an extra $300 per week. So that's a good thing. So unemployment, again, $300 more per week. That was in that proposed bill. We have then the direct pay to individuals. That's the stimulus checks like Esther was talking about.
Yeah,
they did cut those limits down, though, to the top tiers. Before, it was the married couples got cut off at $200,000. Now it's at $175,000, and a single person is at $85,000, not $100,000.
Yeah, and President Trump didn't sign it because he thought that people should get $2,000 per family, which was really nice. While we're getting Esther, you want to go to Ed in Williamsville?
Sure, let's go to Ed. Hey, Ed, how can we help you?
Yeah, hi guys. How you doing?
Good.
Merry Christmas. Happy holidays.
Christmas. Yeah. Listen, I have a question. In this year of the CARES Act, I did take my RMD in January and paid the tax. Now, theoretically, could I put the net of that into my Roth IRA that I have established?
Yeah, you could have done that. You still would have had to pay tax on it, but yeah, you could take the net and converted it over to a Roth.
So I did do that. I know. So I took the net and I have it in my. I'm with Schwab, and I have it in my personal account in Schwab sitting there. So it's not too late. I could actually take that and take the full net amount and put it into my Roth, irregardless of my.
Well, when did you do the distribution?
last January.
Oh, no, it's too late. I mean, it's almost a year now. You can't do that conversion. I mean, are you working right now?
20. Is it a time? Does it have?
Well, you have 60 days.
Oh, 60 days.
Yeah.
Even though I did take the tax out of it.
Right. Yeah, there's 60 days once you receive the money to do anything with it. I mean, in order to put the money back in a Roth now, you would have to have earned income. So are you working still?
Yes.
Okay. How much is your earned income for 2020?
Oh, you mean my total adjusted gross income?
No. Your earned income from wages or self-employment.
Probably about 80,000.
Okay, so then you can put up to 7,000 into a Roth.
I can put up to 7,000. Okay, so there's a time element to this thing. That's what I didn't.
Yeah, because you did it in January of 2020, you would have had to do it within 60 days of that. So by the end of March 2020.
I still don't quite understand why, if you're eligible to do that, but I guess since that money was taken out and taxes were paid on it, that I would have that time element. So thanks for explaining that.
Not a problem. Anytime.
I'm back, Chris.
Yay, Esther's back.
My mic. I'm talking away. I'm thinking that everybody's listening to me, and my mic is gone.
Oh, no.
Anyway, so where did I leave off? Where did you hear
We
me?
finished
The
talking
earned
about
income credit?
unemployment.
Oh, yeah.
Okay, so then the PPP loans, if you got a PPP grant, you can not only, if this bill is signed into law, you can not only take the PPP, which is a grant not taxable, plus you get to take your expenses. So it's like double dipping. So that's another unbelievable thing. And employers can fend off paying their FICA up till 2022 if the bill is passed. If it isn't passed, it's 2021. We'll talk about some more things, but why don't we go back to the phones? We're going to go to Wayne.
Sure.
Hey, Wayne.
Wayne?
Hello, Wayne.
Let's put Wayne on hold.
Okay, how
And we'll
about
go
Mike?
to Mike. Yep. Hey, Mike.
Good afternoon.
Hi.
All right. Okay. If President Trump signs the stimulus, that's for the tax return for 2019. Is that correct?
Well, you'd get the money. It would be 2019, but it's going to be free money. So it doesn't make any difference when you receive it. But a lot of these changes, all these changes, are supposed to be retroactive to 2019.
Based on your tax return for 2019. Is that correct?
Correct.
Okay. My question is, if a child was born in 2020, then the parents can't apply for that stimulus.
Well, that's not true, and that's part of what we're going to get to as well. What they have in this law, if let's say, for instance, you were on unemployment most of this year and you don't get earned income credit, or you didn't have the child in 2019 and so you didn't get the stimulus, they're going to let you do whichever is better. You can use 2019 wages to figure out your earned income credit, and the children that are alive in 2020, they're going to give you the stimulus money for that. There's a reconciliation on the 2020 tax return where you get to work all of this out.
Well, can an infant child can get a earned income credit also?
Well, once you have a child and you have wages, and if your income is under like $50,000, you want to look at the earned income credit. And again, you need wages to do that. And they're going to let you use your 2019 wages to look at the qualifications for the earned income credit if your income's too high this year, or if you didn't have
Too
any
low.
wages because your income was too low.
Wow, it's getting complicated.
Oh, it's
Very.
It's really,
Head
there are
spinning.
so many things in what's happened because of the pandemic, unemployment, because of all the PPP and all that. It's really mind-boggling what's in there, and to make a mistake can really cost you thousands of dollars.
Okay, thank you.
Yeah, so
Okay,
the
hey,
baby,
thanks,
if
Mike.
for earned income credit, the baby had to be born in 2020, and then it sounds like the
Right,
baby-
and the child tax credit they
Yeah.
would get. And then
Right.
also they could even get the stimulus because it's the reconciliation of what's on your return this year to what you received in the mail
Yeah.
or direct deposit or that credit card, debit card for the stimulus. So you may be a winner to having a new baby.
And
in
maybe after
2020.
the break, we could talk to Wayne.
There
but
are
Wayne is
so
back.
many. There's so and employers. Employers, you can't. We're going to get to that on the other side. We're going to take a short break. I'm Esther Gulius, the tax lady from EG Tax. 8030930, 8030930. Star 930 and a cell phone. Text it at 716-8030930. We'll see you on the other side.
We are family. I got all my sisters.
Hey, to us, your family, and I will tell you, the family wants to take care of you. So if you have tax questions, you can always call EG Tax at our corporate headquarters and talk to somebody, a real person. Or you can also, if you're somebody that's digital, can go on our website at egtax.com. There's a portion on there, Ask the Tax Lady, and just ask a question, and we will call you back, or we will answer that tax question right away. Because we want to make sure you know. There's so much on the line with all this COVID stuff. The first stimulus bill had lots of changes in it, the CARES Act, and now the second one has a bunch more stuff, which are really kind of, a lot of the stuff in it, Tiff and Chris, kind of goes against what you learned in taxes. Like if there's a grant, you can't take the expenses. But in this situation, they are so concerned about businesses. If you get the grant, you can still use those grants to take the expenses as deductible.
Or either or just
Well, you can do both.
Or
It's a grant and it's deductible.
Yeah,
you can
and there
now
may be
use
a second
food and
P and
entertainment.
Yeah, and then they're talking about another one.
right, another PPP
As
loan.
soon as there's a change in administration. All right, so I guess Wayne is back, right?
Yep.
Hey, Wayne,
Hi,
how are you?
Auntie Esther, I need your help.
Oh, we'll help you. What you got, Wayne?
I own two homes. One of them
Okay.
is paid for and no mortgage. The second home was built this past year. I had a new construction loan. And at the end of the year, the home is finished. Thank goodness. My question is, can I take the full deduction for the taxes and for the mortgage interest, even though I wasn't able to live in the home this past year? I was going to.
Because it was being built. Is
home.
it going to be your personal residence?
It will be, but right now it's not. I haven't.
Because it was being built.
There
You
yet.
couldn't live in a stick shelter, right?
Correct.
So the question is, can you take the interest on a personal residence that's being built? And the second thing is, can you take the property taxes on your personal residence that's being built? Okay, so Chris,
That's the
Tiff?
question. Yes.
I would say yes, you can.
But and of course the total taxes are going to be limited to $10,000 if you're single or married filing a joint return, $5,000 if you're married filing separate.
Married filing joint, and I guess that was the second part of my question. I'm limited by the SALT. I can only
Yep, that's
10,000.
correct. On the federal, not on New York State.
Right.
You could divorce your wife and then she gets
Oh,
10 and then
Chris.
No, that's.
No, this sounds like a happy man. He's
I know
built her a house.
I'm just saying a way around it, but it's crazy how they built the law.
But the thing is, the interest rates are pretty low. What is your interest rate, Wayne?
2.75.
Unless, let's say you borrowed $100,000, what is your interest? $2,700?
Yeah.
Yeah, so.
Yeah,
yes,
what
you
was
can
your
take it.
interest rate?
Will it make much difference? Probably not.
Yeah, Wayne, what was your interest rate on your first house? Do you remember?
Oh, it was 30 years ago.
18%.
It was high. It was
Yeah.
during the Carter area.
Yeah.
Yeah, it was.
That was-
I remember 18, 19% interest.
Isn't
rate.
that crazy how
Yeah.
high it used to be? And
Yep. Well, anyway, so you got 5 days to make some changes. Are you in? I hope your house is almost done. I hope it's a blessing to you. Are you going to sell your old house?
Eventually, yes.
So, are you going to rent it out?
No.
You're just keeping it.
Yeah.
Just who's going to move into it?
Nobody. We've been here almost 40 years, and we have to do a lot of cleaning. We have a lot of things that have to go, if you know what I mean.
All right, so let me tell you the important thing for you to know. In order for the gain to be tax-free on that house,
Yeah.
you have to have lived in it 2 of the last 5 years as your personal residence.
We
So
have-
it's real important that the clock is ticking once you move out of there.
Yeah.
because you want to make sure that you sell it within that time limitation so you can make the gain tax-free.
Yes,
Okay.
I appreciate that, Esther, and I will do that.
All right.
Merry
Have a
Christmas.
great rest of the holiday. Happy Thanksgiving. Happy New Year. I hope
You're
2021
going to
will be better.
rewind the clock.
No, we want
Right.
2021 to come sooner.
Right. All right. Thanks for calling, Wayne. I'm Esther Gullius, the tax lady from EG Tax, here in studio with Chris Fabian, Tiffany Fabian. We're talking taxes and some of the things that are in the stimulus bill. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. The other thing that was that's in this bill is the expanded employee protection credit. Now, if you have your business lost more than 25% in any quarter last year and you had employees on the payroll, then you can take a credit up to 70% of the wages to $10,000.
Up there's Sir Mike again. 70% of wages up to $10,000. So, I mean, that's a huge credit on your tax return. So check your income statements very carefully. Compare it from 2019 to 2020. So, again, make sure what Esther was saying, check your income. If your income went down for a quarter by more than 25%, you will get you could get that 70% credit up to the first $10,000 in wages.
Which is a lot of money.
So could you guys put that in an example?
Well, like for instance, you can hear me, right?
Yes.
Okay. So let's say you had 5 employees that made $10,000. That's $50,000. 70% of $50,000 is $35,000. That's how much you'd save in taxes.
So the income, so say you made $500,000 in 2019 for the second quarter, which is April, May, and June. If you only made $300,000 in the second quarter in 2020, you qualify for this credit.
When you compare it to the previous year.
Yep.
Right? So it's a comparison that quarter to the previous year's quarter.
Right.
So and employers have to know this. This is a gigantic credit for you. The other thing is, we talked about the earned income credit. If you have to have earned income to get the earned income credit. If you this year were on unemployment for most of the year because you weren't working, you would think, oh, I don't get the earned income credit, but a miracle happened.
Well, if this gets passed, yes.
Yeah, I mean, hopefully it'll get. It sounds to me like a lot of this stuff is going to be flushed out in the net, whatever they do. If they override the veto. Let's go back to the phones, and we're going to go to Lloyd. Hey, Lloyd, how can we help you, sir?
Yeah, I'm calling. I have a question about this. The $1,200 check they gave us last year.
Yeah.
I received the $1,200 check, and when I went to get my taxes done, I was told that, amazingly enough, $1,200 in FICA tax. So I sent them their check back. I endorsed it and sent it back with a note, telling them, here's your check, and I'm hoping it's stimulated you as much as it stimulated me. See you next year. I sent the return receipt requested. Well, about a month later, they sent me a letter in the mail telling me that the check hadn't arrived. So I called them up, and I said, well, it did arrive because I have the receipt in my hand. You signed for it. And we played voicemail hell for a while. And eventually they had to admit that they did get the check, but due to COVID-19, they didn't process the check right away. So there was a fine because it wasn't processed on time. They screwed up. I had to pay a fine. It turned out to be $7.03. So I went to the customer service desk at Tops, and I got a money order for $10. And I sent it to them with another note saying, by the time you get to this check, it'll probably be past due and other penalties will accrue. I just thought I would head them off. See you next year. Well, I just received a check in the mail for $3. Now, if I cash the check, I now owe them $3.
No, not at all. And as a matter of fact, had you come to us, we would have endeavored to have that $7 waived. Just cash your check. Don't worry, you're good. But anybody that gets in that situation where the IRS is wrong, don't just pay them. You can call us. We will write a letter and explain the situation, and most of the time we can get the penalties waived. So cash the check, you're good.
All right, so they're not going
All right.
to against my house for 3 cents.
No, not right now, Lloyd. You're good.
Yeah, well, if the Veterans Association can do that to my friend over $5, I figured, the
No,
IRS.
you're good. And if you have a problem, you come see us, okay?
All right, thank you.
All right, Lloyd. Thanks. Let's go to Scott. Hey, Scott.
Hi, thank you. I am a client, and I do appreciate this service over the radio as well.
Well, thank you.
So I'll give you one scenario, but two different ways, and if you can tell me which is best. So let's say you had two employees. They both make $100,000. They want to give, let's say, $1,000 to a charitable organization. Is it better if they take it, if the employer is willing to take it right from the gross pay? Is that better, or is it better to go ahead and pay tax on it as income tax and then give the $1,000 and take the deduction?
So you're saying the employer's going to make the contribution?
If there was a way to do that, I'm not.
I mean, if the employer made the contribution, then the employee doesn't get the money, and the employee would then save the FICA, and the employer would save the FICA, and so, and the employer would then get the deduction, not the employee. So,
Why don't you
so,
hold
you
on?
know what? Can you hang on? We're going to break for news. We'll be back on the other side.
Okay.
We are family.
Hey, family, this is the tax lady, Esther Golias from EG Tax. Hey, 5 days before the end of the year? You got 5 days to make some last-minute moves. We'll talk about those as we go on. But we are talking about the stimulus because personally, I think that since you got to shut down the government, I mean, Trump may be mad, but I think he's going to sign this thing into law. But we're going to talk about that. Our phone number here, 8030930, 8030930, star 930 cell phone. We got Scott holding.
Yep.
So anyway, Scott, so if you want to make a charitable contribution, you can, and under this stimulus bill, the CARES Act allowed $300 to come off as an adjustment before itemizing. And now under this new stimulus bill, it's going to be $600 if you're filing a joint return. So, but if you give $1,000 to a charity without itemizing, after the $300 or $600, if you're filing a joint return, you won't get any benefit. But your employer, if they give $1,000 in your name, you're going to get no benefit except for the reduction in your income. So technically, you're really not giving the contribution your employer would be.
All right. Well, if it was okay, so let's just say.
So I mean, if you just want them to get the $1,000, if it's completely philanthropic, then they're getting the money and you're not going to get the deduction either, because you won't get the money.
But if it was self-directed, let's say like
Self-directed?
how they, well, meaning, let's say you signed up for United Way to give through.
Okay, so that's
Out of your
payroll
paycheck,
deducted.
Payroll check.
Yes. Okay. That's
But that means that you're still paying the FICA and everything.
okay. So you.
So it won't make any. It's 6 of one if it doesn't know the other.
Oh, okay. So it really doesn't matter if you pay
Right.
it afterwards or pay it out of your own.
That's right. Because if you're doing a payroll deduction that you authorize, then it's going to be taxable to you and then deductible to you. And if you're using the change in the tax law and you're married filing a joint return, and this thing goes through, it'll be $600 that you'll be able to take off before itemizing.
Mm-hmm. Okay. What if you do it consistently? I'll give you the situation.
It
Okay.
doesn't make any difference.
Yeah.
Consistent, inconsistent, if you give money to charity and it exceeds that $600 and you're filing a joint return, the rest of the money goes on the Schedule A. And if you don't itemize, it won't make any difference
Yeah,
except
I've
on the state
discovered
of New York.
most of my married filing joint clients don't really itemize, and so this new rule will be great for them because it's standalone, so it'll be really
Right.
beneficial for them.
Right, it's before you itemize. So,
I
mean, giving to charity is wonderful, but unless you're an itemizer, it's not going to make any difference in most cases, except for this new change, which lets you take up to $600 if you're filing a joint return.
Okay. All right. Well,
Okay.
thank you. I appreciate.
All right, thanks a
Our
lot.
pleasure.
Okay, let's go to Pam. Hi, Pam.
Hi there. I was wanting to know when Joe Biden becomes president, is it going to be a stipulation where we have to still take maybe the shot or something before they give you the stimulus money, or how's that going to work?
Okay, so if President Trump signs this thing into law before the end of the year, then they're going to, just like they sent you the first stimulus, they're going to send you a second stimulus. And there's nothing you have to do. If you filed a return, they're going to send it to you automatically, just like you got in the first $1,200.
Okay, so you don't have to take the shot, or not. Is there not going to be any shot taken or anything like?
Oh, the
Any what?
injection, the COVID injection.
A shot?
The COVID.
No, the COVID has
vaccine.
nothing to do with the
Shot.
stimulus. No, it doesn't have anything to do with stimulus.
Okay, then.
That was a good
Okay, dear.
question.
Okay,
That was a
thank you.
really good question. Good spin.
You never know.
Interesting. Interesting. I mean, you can't even get the shot.
Yeah, the rumors out there. Yeah, you can't even get it.
It was interesting because I just was reading a site that said that an easy way to get the stimulus money into people is to just give them the extra money when they file their 2020 tax return,
right.
which is another angle
That is.
on it. I
Yeah.
think right now, if you can see, it's all up in the air. Okay, so employers have to understand that if they lost more than 25% in any quarter, and they have their employees still on in that quarter, compared to the 2019 quarter, same quarter, you can get a credit up to 70% of their wages, up to $10,000. So if you had 5 employees making $10,000 in that quarter, that's $50,000. You would get a $35,000 credit. That's a lot of money.
That's
A
huge.
lot of money. The other thing is, in this bill, the deductibility of business expenses for entertainment is now put in a place for 2 more years.
But for 20,
So it'll be for 21 and 22.
right. Yep. And then don't forget, if this gets passed before the end of the year, the FSA accounts, you don't have to spend it all.
Oh, and that's a great point,
That's
Chris.
a good
The
point.
FSA rolls over.
Right.
Which is
It's
next
not a
year.
loss.
And any other cafeteria plans that you have
Yes.
rolls over if you don't use the money. Okay, so who do we have waiting? Eric?
Eric, yes.
Hey, Eric, how can we help you?
Hi, on the nightly news last week, there was a tax expert who said that even if you don't itemize your taxes, you can claim up to $300 in charitable deduction.
Yeah, that's what we just talked about. $300 if you're single, right? If this bill comes through the second stimulus, it's $600 if you're filing a joint return. That's
Hey,
over
Eric.
and above itemizing.
Merry Christmas.
Merry Christmas.
How's your son doing?
He's doing good.
Good. Yeah. So I know Eric. He's a client of mine, and he usually doesn't itemize. So this would be perfect for him. And
Right.
and if
But
it's
you have to give it. I mean, they don't allow you to just take it, Eric. You have to have given it.
Oh, yeah, I do. I get
Yep.
more than that every year.
Oh, that's great.
yeah. So
And don't forget, on the state of New York, they don't have that adjustment. It would be a full itemized deduction on the state because the state's itemized deduction threshold is lower than the federal.
Okay, I'll let you
Okay.
take care of that.
and don't forget, it's going to go up to 600. We hope if he signs
we
it.
hope.
It's,
Right. And then let's go to Bob. Hey, Bob,
Merry
how can we help you, sir?
Christmas.
How you doing?
Good.
I have a question about mortgages. I have a home that's worth about $375. I have a line of credit on it of $80,000. I also have a double, an income property that I owe about $95,000 on. My home, the interest rate is 3%. My income property, the interest rate is 4%. Would it be wise to take and roll those into one mortgage at the lower rate, or do I want to keep them separate because the one's an income property?
Well, I would keep them separate because you have to be able to track. If you're an itemizing person, you have to be able to track where your interest that you're deducting on the Schedule A comes from, as well as tracking where your interest comes from on the Schedule E. So to keep it simple, that's
Yeah,
not,
they like
I guess I
separate
wouldn't
books.
combine them
Right.
if at all possible.
But I got to tell you, the interest rates are so low. So make sure
Right, you just might want to see if you can't refinance that investment property.
Right. The problem is usually when I don't know what the difference would be because income property mortgage is usually a little bit higher. It
Right.
To be about
Well, right now, interest rates on your primary mortgage is like a little over 2%.
right. Right. That would be being a line of credit that I'm probably 3%, a little over. It fluctuates. So that would probably be
So why wouldn't you just put why don't you just put a fixed rate mortgage on your house?
right. I could do that. Yeah.
I mean, because, and I think there's almost no closing costs. So to go down a percent would be a great thing. And then while they're doing that, take a look at your rental as well.
Yeah, you can call Jesse at Cross State at 984-6968, 984-6968. And you could ask him what he can do for you and see.
Right, because I would definitely, if you're not planning on selling, I'd look at it for sure. Anybody that's got an interest rate a percent or two over and you're not planning on selling your house for the next couple of years, I know refinancing sounds like a big pain in the neck, but, well, you guys just refinanced. What did you save when you took a look at everything you did?
We're supposed to close on Monday or Tuesday. The titles are so backed up in New York State.
But
how
how
much
much
do
are
we
you gonna
save?
save?
About $1,500 a month.
That's a lot of money.
That's a lot of money.
That's a lot of money. That's
Yep.
$18,000 a year.
Yeah, it is.
Which they're very happy to take.
They are very happy. Now,
Right?
some of the money is us. We pulled some extra out to pay some credit cards off.
But our
and-
mortgage payment is still about
but
the same
This is
as
all
what-
going to
Oh,
reduce
yeah.
your overall debt.
Oh, yeah.
It's remarkable. Okay, and then going back to some of the other things that are in the bill, and that's why I wanted to talk about this, because it isn't just the $600. You can see that there's all kinds of things benefiting people, especially, like with the earned income credit. And when you do the reconciliation, if you didn't get them, and then Chris, why don't you explain about you are a non-custodial parent, so in 2019, the custodial parent got the kid, but now in 2020, you're going to get the kid, then you're going to double dip, right?
Right. We've called a lot of different places on this. And so between the custodial and the non-custodial, if a child alters every other year, that $500 per child is going to be, 1 year it goes to the custodial, the next year it's going to go to the non-custodial. So that is a double dip. Both parents are going to get that $500 stimulus
Right,
for that child.
So if you, mom, have custodial children that lived in your home and you claimed them in 2019, and they sent you $1,200 for you and maybe two kids under the age of 17, another $1,000, and you got $2,500, Dad this year, who gets to claim the kids because if it's his year, he's going to get the extra money as well in this reconciliation. So it's this reconciliation portion of the stimulus money is very, very, very important. You want to make sure you do that.
I've been doing taxes for 23 years. The word double dipping never comes about, and so it's just my.
It's like a naughty
only
word.
People I knew that double dipped were ministers.
It's crazy,
and they could do it legally,
Yeah.
right?
Yeah.
Yep.
Because their housing wasn't taxable. They only had to pay FICA unless they had opted out. And so they got to double dip. This is the only time I've ever seen in taxes that you get to double dip because they're trying to help people because of COVID.
Yep. Which
Right?
is great.
Okay, and then food stamps were supposed to be expanded. The extenders were going to be extended. If you if you were somebody who couldn't afford your house and your eviction is going to be up as of December the 31st. They were going to move it to January the 31st. They were forgiving $1.3 billion in student loans.
Gosh, that's
So
great.
you can see it's not just the $600,
Right.
And And the other thing is, and you have 5 days to do this, you can take money out of your pension plan, and if you pay it back within 3 years as a loan, it's going to be completely tax-free
If you were
and no penalty.
impacted by COVID. Yep. Which
Right,
is sort
impacted
of
by COVID. Well, all this stuff is supposed to be
Yep.
impacted by COVID. So it's unbelievable what's out there. And
wanna
if
take
you
a-
have any questions, you can call EG Tax at our corporate headquarters. You can go to our website at egtax.com. We're going to take a short break. We're going to be back 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We'll be back with your calls on the other side.
We are family. I got all my sisters.
Hey, to us, your family, I'm Esther Golias, the tax lady from EG Tax. Our offices are going to open up all of our branches. Our corporate office is open all the time. But our branches open up on January 15th or 20th. 20th, Chris, Tiff?
Right around the 15th to the 20th. Depends on everything when the government.
Because right now, we're not going to staff the offices if they're in the middle of not letting us do tax returns. But it'll be right around the 15th to 20th of January. Flexibility is the word, the byword that we're talking about lately, because you just never know what's going to happen.
And
another thing I wanted,
I
Chris.
just want to say, in this year for our listeners, our offices, we are doing face-to-face, we're doing virtual appointments, and we are doing drop-off. So if you're still not feeling safe out there, you can send us your stuff, and we can do your tax return through the computer.
So you can download our app. We have
Yep.
an EG Tax app. You can download, it's no charge. And there's a part on there called Atom, ATOM, and you can set up your own virtual whatever drawer, and you can upload all of your forms, and we'll have everything, and we can do it, and it's non-touchable. We won't see you, but we will interview you to make sure that we're doing the very best job possible. There are so many hidden things under the bushel baskets this year that it may look the same, but the law underneath that line that you're filling out can be so complicated. So we want to make sure
It's so
that
funny.
you know what you're talking about.
Last
Yeah,
tax
Jeff?
season, I would have my clients would drop off the stuff. They would wait in the parking lot, and we would text each other back and forth, and then they would come in and sign, which you could electronically sign this year if you wanted to.
Hey, let's go back to the phones to talk to Kevin. Hey, Kevin.
Kevin?
Hey, Kev.
Hello. Hey, family. What's going on?
Nice to talk to you. He's my Jamaican man.
No, Turks and
Turks and Caicos?
No.
Trinidad.
Trinidad. That's right. But yep, my daughter My daughter heard last week, and she said, "Did you tell him I played soccer with a girl in college who was from Trinidad and Tobago?" So I had to make sure I said it.
So, Kevin, what can we do for you,
Calypso music
man?
is what you're hearing in my voice.
What can we do for you, Kevin?
Well, two quick questions here. One, and I'm sorry I missed you were saying something about student loans and earlier. And
Well, they're supposed to, in this bill, if it's signed, $1.3 billion in student loans are supposed to be forgiven.
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 Oh, is that means? I mean, when you say forgiven, is like you wouldn't have to pay it back.
Well, I mean, it was only 5,000 pages, so no one knows exactly the exact stuff. I mean, it's like an iceberg. There's a lot of stuff underneath the water, but right now that's a highlight that I read. And I don't know who would qualify, whether they're going to use income as a criteria or how old the loans are, but that's in the bill.
Oh man, I don't know. I mean, haven't you heard about countries like Greece and others? But anyway, and in addition to which, in relation to IRAs, I know you can take a loan out on your 401k.
You can take it out on your IRA as well. You can't borrow the money on the IRA because borrowing on an IRA would be taxable. But under the CARES Act, you can take up to $100,000 due to COVID, and if you pay it back within 3 years, it's treated as tax-free.
Oh wow. Okay, yeah. Because I was going to
But there'll
ask,
be no penalty as well.
and there'll be no penalties.
Right.
Oh, that's cool. Okay.
Okay.
Calypso.
Happy New Year, Kevin.
A day like
Get
today.
those drums going.
A
We
day
need
like
a palm
today,
tree
it's good to think
someplace.
about calypso music.
So you got 5 days if you haven't contributed to your pension plan. where, especially if you have an employer match. I was just talking to a friend of mine today who said, I can't believe that somebody that would have an employer match wouldn't put money into their pension plan. Because the truth is, if you put it in the pension plan and there's an employee match, that's free money. You could actually take the money out that you put in, and you would still make out. That's
Right.
It's remarkable. And then the other thing that's going to be coming down the pike, because they're talking about stimulus 2 and stimulus 3, is what to do with your kid that's in college. Should you amend the return so that you take the kid off, so when he's doing the reconciliation, he can get the $1,200?
Right. Got to look at your credits that you received, and so
because it really is interesting. So let's say you had a kid that's in third year of college and maybe got a lot of scholarships and you really didn't get much benefit for them except for the $500. You might want to amend the return, take the $500 off of yours, pay that back, and your child would get a $1,200 stimulus.
Yep.
You got to run the numbers.
You got to run the numbers.
What? There's a
Right?
text, 2 texts.
Okay, we got another text. What's
Yep.
our text?
It says, question about double dipping. On my 19 return, I claimed my son and my ex-wife claimed my daughter. Could we swap who we claimed to get an extra $500 on the 2020, or would it not work like that? Thanks, Sam.
It does work like that.
Well-
you don't have to swap. I
According
mean,
to
what
divorce
No, what he's
whatever
talking-
you'll get, you don't have to swap.
Right. What he's talking about is how we said how the custodial and non-custodial parent. But because they both claimed one child last year, when they do the reconciliation, it still will only have one child. It doesn't go by Social Security numbers. So for them, it won't work. It would be where the custodial parent claimed both children, and now this year the non-custodial will claim both children, where the double dipping occurs. Here it was 1 and 1. So
Right, so that won't make any difference.
Correct.
Except that it all depends on how much. If the stimulus money on the second go round is $600, they'll make an extra $100, but that's no big thing.
Right.
All
And
right.
then
we got one more.
Yep. It says, please explain the earned income credit changes on the new CARES
Okay,
Act, the
all right,
stimulus
so
package.
the earned
if you
income
can.
credit is for people that have. There's 2 types. There's an earned income credit for people between the ages of 25 and 65 that have wages and they have lower income. They, regardless of whether they had children, could get an earned income credit provided they had wages. Okay? The big earned income credit is for people, regardless of their age, who have wages, that have qualifying individuals who are considered children that live in their home. It could be a child that's older who's disabled, for instance, but you have to have wages. So if in 2020 you had unemployment and no wages, even though in the past you got the earned income credit, you wouldn't qualify. But under this year's change, they say, okay, so you don't qualify for 2020, but if you would have in 2019, because you used to work before the COVID, we're going to use your 2019 wages to figure the earned income credit, and that would really save the day.
It would. That
Is
was
it-
right
Yep.
because there's so many people that weren't working and wouldn't qualify in 2020.
Yeah, so if you had someone in 2019 who made $15,000 with 3 kids, they had an earned income credit of the federal of around $6,400, we'll say. Now this year, their earned income credit is $1,000 with all the unemployment. Based on the $1,000, their earned income credit would only be a couple $100
this
bucks.
makes-
but
sorry.
with the new law, you can go back to 19, use that $15,000 earned income figure to get the earned income credit. So now they're going to get the $6,000 earned income credit
this-
again, plus
yep.
all the extra
This
unemployment.
Makes me think of a caller I took about 5 weeks ago, and he said he got workman's comp the whole year, and he has children. And can he file and get earned income
Well, in that
credit?
case, he'll go back to the 2019
Yeah,
return,
I
just
wish
like
I
we
could have
talked about.
told him that.
I mean, it's remarkable what they have done. And so it's not as easy as the news media says it's $600. It's not $600. You know,
No.
it's a lot more than $600. There's all kind of things in the tax law that benefit people. So, and we just wanted to unpeel the onion so that you knew that. The other thing is, So the cafeteria plants are going to roll over, hopefully, right? If this
Right.
bill is passed. The other thing is, if you have questions, and just don't assume you know the answer, because it's so complicated this year, and there's so many curves that would have in the past not been deductible. The Congress really tried to roll out something to help regular people. And the other thing is, if you're a business, take a look at your net profit. If you did very well this year after the PPP money, because if that's going to be deductible, you want to make sure that you buy your assets before the end of the year, because that'll reduce your tax liability, because that would still be taxable. So that's something you want to look at. And again, people can put money into an IRA regardless of their age, as long as they have self-employment or wages. So somebody 75 still working can make a contribution in 2020 to their IRA. This is a major change as well. So those are just some of the things that are coming down the pike.
Yep, and someone just texted in real fast. So can you withdraw from your IRA and pay back in 3 years? And that's a yes, as long as you were impacted by COVID.
Up to $100,000. And
Right,
if you're
so
under the age of 59 and a
so,
half, you're not impacted
you would
by the
never
penalty.
want to do it just to do it, but if you need the money, it's in there. And the whole thing is, we want to help you. So during the week, you can call us at our corporate headquarters, 632-7886. You can email us at egtax.com. But before the end of the year, the next 5 days, really, you can right your ship, so to speak.
Yeah.
Because, and hopefully you can see that there's a lot of things in the stimulus package that if it gets passed, it isn't just $600. It's a lot of other things. And employers, if you need help about what's in there, I mean, like for instance, that employer retention credit, 70% of the wages you paid them, 70% up to $10,000. That's $7,000. That's a lot of money.
Yep, definitely, definitely.
Okay,
Yes.
now are the ski slopes open?
Ski slopes are open.
They are.
So you just socially distance. You
Yeah,
got
and
your
if you got
ski
skis
stuff
for
on.
Christmas,
I'm
go
so happy that
do
the
it.
ski slopes are open. We love businesses to be able to make money. Until next week, I'm Esther Gulius, the tax lady from EG Tax. If you need us, you can go to our website at egtax.com. This is Tiffany Fabian, Christopher Fabian. Call us 632-7886. Have a great week and merry end of the year. We'll see you next week. Bye-bye.